an afternoon session which starts off with Takaful. Takaful is the Islamic insurance, or the Islamic equivalent of conventional insurance. And I'll let the chairperson for the session speak about Takaful and what it entails. But essentially, Takaful is an Islamic element of Islamic alternative of insurance. And Lord Sheikh has kindly stayed behind because he has a personal interest with his companies and his background in Takaful to be involved in this session. So without any further ado, I'm going to invite Sheikh Badrul Hasan, who will be chairing this session, my co-chairman at Dome Advisory, someone who is you can read his profile in the program, but he's a Sharia scholar and an English qualified lawyer, which is a deadly combination. It's a deadly, you can't go wrong. He'll either catch you through the English law or through Sharia law. And his fellow panelists are John Gilbert, a seasoned pro and somebody who knows the mutual sector really well, and somebody we've worked very closely with for Islamic insurance. We have Clive O'Connell, another lawyer, a partner at Goldberg Segalla, very well known and has expertise in this space. We have Bilal Zafar from Swiss Re, shares my first name, which is always good. And Swiss Re is a big brand. You all know the top 3 reinsurance companies, Swiss Re, Hanover Re and Munich Re, so we're very grateful for having him here. And finally, Faizal Karbani, a very close friend, somebody who's been involved in the asset management, investment funds and the Takaful side of work. And I'm hoping, inshallah, you will get a wide breadth of expertise from lawyers, Sharia, Re Takaful, asset management, investment funds, IFIs, and it will be a really interesting session. We have approximately, here it says on the program, 45 minutes, and it's down to these gentlemen to do justice to that time. But I'd like to invite the chairperson and the panelists. Thank you very much.
السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. I begin in the name of Allah, most gracious, most merciful. Now the topic today is Takaful. The word Takaful actually comes from an Arabic word kafala, which means a guarantee. And in classical times, Muslim communities and Muslim scholars were looking at how they can manage their risks. And the key problem that they faced was that the Sharia, the Islamic law, prohibited the selling of risk. So there's a hadith or a statement of the Prophet Muhammad, peace be upon him, which says that naha an bay'il gharar. He prohibited the selling of risk. Now I often say that if today in our society we simply followed this one maxim, then we wouldn't have the financial crises that we see so regularly and more and more frequently nowadays. If we simply stopped selling risk and try to manage risk in a perhaps a more mutual manner, and we'll talk about that, and I'll ask the panelists to amplify that point. So what they realized is that what we can do, instead of selling the risk on for a premium, we can pool the risk into risk pools so that people tie their futures together, and essentially you have a mutual type of insurance. And so there are obvious synergies between Takaful and the mutual sector. Now what's happened in modern times is a hybrid type of Takaful has grown out through a combination of certain proprietary elements and certain mutual elements in various degrees. So you have different formulas, if you like, in different parts of the world. And again, we can try to amplify the experience of Takaful in different countries to see how we can learn from that. And finally, we have an experience in the UK of a number of very noble attempts to launch Takaful products, which have, for various reasons, not survived. And again, we can talk about the challenges in the UK and the opportunities at the same time because of the change of circumstances. We have a demographic change. We're on the cusp of a massive demographic change over the next 20, 30 or 50 years, and I'll let some of our panelists amplify that point, and perhaps that will change the commercial dynamics of the opportunities for Takaful. So with that brief introduction, I'd like to open up to the panel and I'd like each panelist to provide their opening remarks. So let me start on the right. John.
Okay, thank you very much. I would start with the contention that Takaful has actually been alive and well in Europe and in the UK market in particular for the last 200 years. And the reason for saying that is that the mutual sector evolved into something like its present form during the Industrial Revolution, when people who had lived in self-supporting rural communities found themselves living in the growing industrial towns without that level of support that existed in the rural communities, and formed mutual self-help societies where it was, just as you've described, a matter of pooling resources, pooling risk, so as to avoid the situation where somebody falls on hard times, becomes ill, or dies without the means to provide for a decent funeral. And that has evolved over the last couple of hundred years. Friendly societies in particular were very, very big at the beginning of the last century. They were the vehicle during which the nascent welfare state was provided from the first social welfare legislation in this country around 1911, and flourished right up until the welfare state in the state that we know it today came after the Second World War. There was then a period of decline, and really mutual insurers during that period of decline looked very much like any other kind of insurance company. Recently there has been a revival. There was a spate in the late 1990s of demutualizations of companies giving up their mutual status and becoming shareholder owned, and doing exactly what the Quran prohibits by trading in risk. But over the last decade or so, there has been a revival. The market share of mutual insurers is growing. And I describe them as Takaful already in existence. I'll stick by that, but they're also Takaful heavily disguised. And I think the task of the Islamic finance industry in relation to this is stripping away that disguise and making mutual funds able to replicate the full requirements of a Takaful fund.
Thank you very much, John. Faizal, you're at the coalface of providing independent financial advice at the retail end, because you have an outfit called Simply Sharia. So on a daily basis, you're meeting people who have investment requirements, but also risk mitigation requirements. So can you tell us a little bit about your experience and your sort of...
Sure. Good afternoon, everyone. It's great to be here and talking about this subject. I do feel quite passionate about this area because, as Salman has mentioned, I'm basically advising people on a daily basis on their financial planning, their financial affairs, and my counterparts in the conventional space basically often start with protection as the area they start with financial planning. So things like what happens if, for example, you lose your job, you have a critical illness, those sort of things which are so important in today's world. But as a financial advisor in the Islamic space, I don't actually have any products to deal with. And that's a source of great frustration for me for the last number of years. So I've got a vested interest for myself, but also for the community in this country, and I think on a wider level throughout Europe and the Western countries, to see Takaful establish itself as a product offering. And I was very encouraged. I've had the pleasure of working with Bilal and Salman over the last year or so, looking at this space a lot more. And the comments that John's just made about the mutual sector gives me great hope, I think, that actually there's already something there in essence that we just need to tweak, work with in terms of making it more available, more accessible, and making it Sharia compliant in terms of the investment underpinnings, etc. But I think, like with a lot of things in Islam, there's this label called Takaful, or we use all this terminology, but in essence, Takaful is mutual insurance, is about mutuality and indemnification on a pooled basis. And I think that's nothing new, as we've just heard, in the market over the last couple of hundred years. So I think there's a great opportunity, and hopefully we can discuss some of those opportunities and challenges that go with it. But this is very much needed, and protection is something, a language that all of us speak. Every human being understands the need for protection. So I think we should really pursue this, and it's not beyond the wit of man to produce something in the Western world which can work, which is commercially viable. And I think that's been the challenge. We had Salam Insurance, for example, come to the market, and unfortunately they went out of business. But I think we can learn from these experiences and bring something which hopefully will work.
Thank you very much, Faizal. And moving on to Bilal. Bilal, you're in the reinsurance space with Swiss Re, and we know that you have a reinsurance Takaful operation out in Kuala Lumpur. But can you tell us a little bit about sort of some of your thoughts relating to reinsurance of Takaful business in Europe? Because reinsurance is the key element that has to plug in order for Takaful to work at all, because especially when you're starting off with a small book of business, you want to try to reinsure some of that, and you need to find a reinsurer who's willing to do that. So can you talk a little bit about the Takaful and the re-Takaful space?
Sure. Good afternoon. It's a great pleasure to be here. So I think being a reinsurer and being sort of a backer for insurance companies to take the risks that they take, we rely very much on insurance companies. And in the Takaful space, a lot of the groundwork needs to be done by our clients. We very much rely on them to sort of have enough business volume, to have the expertise to underwrite the business, to invest in the proper manner, and also to run it in a Sharia compliant way. What we provide is the financial backing, and from our side, we guarantee that our business model will be Sharia compliant. We have our own Sharia scholars. We operate as a re-Takaful entity. So I think in our business, it's very important that we work with the people who are trying to grow Takaful, who are trying to promote this model, who are trying to bring it to different parts of the world, not just Southeast Asia and the Middle East, but also to Europe. And there's lots of challenges that we run into, and from our perspective, I guess one of the biggest challenges is the sort of business volume and the scalability of Takaful. For us to be able to make a business case to begin with, but also to invest enough resources and to fully support the model, we require a certain volume of business and a portfolio which is sustainable. And even though the opportunities are there, I think all of us can see it. It hasn't, unfortunately, taken off in Europe yet. I think it's just a matter of time. And from our perspective, we are waiting for that time to come when we can start supporting the Takaful industry in Europe. We're very much actively supporting it. So me personally, I've spoken to lots of people in the last couple of years in the UK and Europe to find ways where we can support them in starting up the operation, and obviously eventually also taking the re-Takaful, provide the re-Takaful backing as well, which is, as you said, Suma, it's extremely important for Takaful companies, especially startups, because they cannot go into the insurance business without protecting the extreme catastrophic risks.
Thank you very much, Bilal. Now, Clive, you're also in the reinsurance space, and as a lawyer, you have a wealth of experience in drafting reinsurance wording. So can you tell us a little bit about your experience and sort of the Takaful sort of issues that you've come across?
Could I just start by taking issue with something that John said? Mutual insurance doesn't just date back 200 years. In fact, the first example of non-marine insurance was Icelandic farmers getting together on a mutual basis at about 1100, so quite 700 years before the Rochdale pioneers got going in England. And I think that actually exemplifies some of the issues that exist, that this is a product, a business that can be very international, and one needs to look at it on a Europe-wide basis, because many of the issues, many of the problems that stand in the way of Takaful can be resolved if one looks at it on a broader way. Takaful's biggest challenge is the same challenge as the biggest challenge to the mutual sector, and that is probably, in Europe at the moment, Solvency II. Solvency II places requirements for solvency on insurers doing business, which mutuals find a lot more difficult to cope with than other insurers do. We're in an environment at the moment where mutual insurance is something that everybody wants. After the dark days of 2008, big anonymous banks and big anonymous insurers are no longer very attractive. The idea of coming together to mutually insure each other is very positive, not merely on the Islamic side of the world, but on every side of the world. It's something which we all have in common. And this is a time when mutual insurers ought to be flourishing. But instead we have the spectre of Solvency II looming over the market. Insurers can get over that hurdle, non-mutual insurers get over the hurdle in a variety of ways. Reinsurance is one of them, insurance-linked securities is another, and going out to the equity markets to get investment is yet another. Certainly, the equity markets aren't directly open to mutual or Takaful insurers. It's questionable whether ILS solutions are open to them. A lot of ILS solutions are not insurance, but they're probably worse than insurance insofar as they are derivative-based products, bonds which are triggered by events analogous to wagering in any environment other than the capital markets environment. And that leaves a very narrow band of opportunity for obtaining the capitalization, the solvency structure that mutuals need into the future. There is, however, hope. Although the mutual sector in this country, which provides the infrastructure for Takaful, is around 9–10%, but growing. In Germany, it's 60% of the market. In France, it's 40% of the market. And therefore, the hope is that those countries will be very careful about how they impose Solvency II on their mutual insurance sector. And that could be the salvation for Takaful in the future, because with European single passports, one can utilize an establishment in Germany or in France to operate throughout Europe.
Thank you very much, Clive. I'd like to make this an interactive session, so I do have some follow-up questions for my panelists, but at the same time, if you feel you'd like to make contributions or ask questions, please do so. I can see 2 hands over there. So I'll take those right now.
I think the answer to that is exactly as John put it beforehand, that mutuals, and of which P&I clubs effectively are, and Takafuls share a common infrastructure. There are obvious differences of Sharia compliance in the religious sense, but in a legal sense, there is very little difference at all. And the infrastructure in which those can operate grants the infrastructure in which Takafuls can operate.
To ensure to what extent they would still have that reluctance, or they shouldn't have any reluctance in order to insure themselves with the P&I clubs. Because we know so many merchants, so many traders would rather take the Muslims rather take the risk and not insure themselves. And this is happening quite a lot. And if these P&I clubs are there, and there would be Muslim ship owners, should they be reluctant or shouldn't they be reluctant? Anyone of the panel, please.
I think this is more of a Sharia issue, so if you don't mind, I'll respond to this. With the mutual insurance entity, there are two issues that are relevant to Sharia compliance. One is the front-end contract with the members, so whether or not that is done in a mutual manner, that's compliant with Sharia, but also the asset management, if you like, the back end, whether or not that's invested and managed in a Sharia compliant manner. So what we may find in certain circumstances, and I'm not an expert on the P&I clubs, but the front-end contract may well be very close, if not Sharia compliant itself. But I think we'd also need to look at how the money is invested on the back end and make sure that it's not invested in non-Sharia compliant assets. Now this is perhaps a problem that can be easily overcome given the sheer size and mass of the Muslim world. I think all you need is Muslim countries or even a supranational body like the Islamic Development Bank to have a vision for this and come together and create a P&I club that is Sharia compliant for Muslim ship merchants. Clive.
Yeah, again, I have to say, P&I clubs are not my prime area of expertise. I concentrate more on long-term insurance, life insurance. However, my understanding of a P&I club is exactly that. It's a club. It's a group of ship owners who come together essentially. And as you've said, I see no reason why a group of Muslim ship owners cannot come together and set up a P&I club which does invest in a Sharia compliant way and indeed conduct itself completely in a Sharia compliant way. And as I say, the infrastructure is ready there. Another aspect of P&I insurance is that it's often conducted on a discretionary basis rather than on a purely contractual basis, which again, I think lends itself more readily to Sharia compliance than a strict contractual arrangement.
Adopted by,
I believe so, yes.
by the Islam. So, well, I think it's high time that this is done. I deal quite a lot with shipping and P&I clubs, and this question continued to crop up in my mind, and I was really surprised that why, whereas the Islamic banking is catching up and is going pretty forward, why the Takaful has not really hardly moved.
I think this comes back to the main challenge, which is awareness and education. I think it does come back to this fundamental issue because you mentioned that some people would actually prefer to not insure rather than be part of a P&I club, and there is a misconception in some segments of the community that insurance per se is not allowed. So what I say to that is that the primary concept of insurance, that losses of the few are paid by premiums of the many, this still applies. The difference is that it's a pooling solution rather than a sort of pure risk-taking enterprise. And as long as that's the case, it's fine, and it is Sharia compliant. And I think there is a misconception there which needs to be addressed.
I can just add there, I think this is a live issue. I was teaching on a course not so long ago, maybe 2-3 months ago, and there was someone from a P&I club and we talked about this issue, and her sole purpose of coming onto that course was to learn more about Islamic finance so she could go back and spearhead a project which would make what they have in situ at the moment Sharia compliant. And she felt at the end of that course actually there was not much tweaking to do. It was essentially Sharia compliant already. There was just some other stuff that they needed to do around the asset management and the contract. But I think this is the whole point, that we actually don't have to reinvent the wheel. There is, in essence, Takaful out there, the point that was made at the very start of the session. We just have to rediscover it and actually package it and get it Sharia certified and get it out into the market. So there are solutions.
If I could add one point as well, carrying on from something that Bilal said earlier, business volume is very important. And therefore, in starting something up, although the operation must be Sharia compliant, there is no need to restrict the people to whom one is selling it to Muslims. It can be sold on a far broader basis than that, and therefore capture more market share, and therefore get to that critical mass that can allow the operation to succeed. It's getting the product right and getting the price right is vitally important for that.
Just to touch upon a word that Faizal used, he said it's something that needs to be rediscovered, and you also mentioned that it's high time, and I think it would almost be like a homecoming, because it's highly probable, I know we can't prove it, but it's highly probable that the idea of the P&I clubs originated with Muslim shipping merchants in the Mediterranean going back perhaps almost 1,400 years. So it's something that I think Europe has learned from the Muslims, and perhaps we can and in a sense incubated it for us, and then perhaps we can now come and rediscover it. Gentleman over there.
My name is Dr. Ali Khurshid. I'd just like to add something which is Clive did make in his own comments. The initial insurance actually done by Prophet Muhammad nearly 1465 years ago, when he was trading for Khadija during his voyage from El Sham to Mecca. And he initiated the mutual insurance then, and I think that will answer the P&I exactly the same. Thank you.
I would just add, my point was about non-marine insurance.
All right, okay, accept that.
Thank you very much. O'Shea.
I think the point you made is very valid, and that is we've got a history of mutual organizations, particularly in Scotland, because I said earlier on that the first life office, which was done on a mutual basis, was Scottish Widows. So the point you make, sir, we're talking about insurance organization, and we've got a history of mutual organization. And if you look at the strength of cooperative movement, the strength of credit unions, indeed we've got a history. Now, you mentioned, sir, earlier on about Salam Insurance Company. I know where things went wrong. The difficulty was that they concentrated on personal lines, which is motor insurance. I used to own a very large organization, and I got rid of my personal lines because it was not profitable. With personal lines, unless you do it on a very large scale and you can control your expenses, it will not work. Now, I think there's a demand for Takaful insurances. I think the point you made, sir, is very valid. We've got 3 million Muslims here, but it's appealing to non-Muslims as well. Certainly, if you're going to enter into Takaful insurances, keep away from motor insurances and household insurances, because it's very competitive price. I think there is appetite for Takaful insurances. There are over 1,200, 1,300 mosques in this country. There's a demand there. Now, I mentioned earlier on about Shard, I mentioned earlier on about buildings being put up, and some of the funding is coming from Islamic funds. And also organizations, SMEs. Certainly, I think these are the people to capture. Now, the difference between a mutual organization and Takaful insurances is a question of how you're going to invest the funds. You talked about mutual organizers. Of course, you can invest your funds in whatever way you can. But if you're going to have a Takaful insurances, you have to have clear ideas where you're going to invest your money. And this is, I think, the difficulty. Now, if you're going to go into Takaful, of course, there are ways of doing it. One is, of course, to set up a standalone company, or you could be a window. But I think a good idea is to approach a large organization which is transacting Takaful insurances, whether it's Malaysia or Middle East, and perhaps tag on to what they are doing. There could be, you see, I said earlier, and Bilal picked up on this point, about watching your expenses. If you can do that, and you can use their facilities, you can use their Sharia scholars, and if you look at the cover, if you're going to be competitive, you've got to provide cover which is available in the conventional market. All right? You're showing a building, you've got to have cover for fire, special perils, accident, dental, employees' liability, all that business. So your cover has got to be competitive. If you look at Takaful cover and non-Takaful cover, the cover is the same. Question arises, it's got to be done on a mutual basis, it's got to be transparent, and where your money is coming from. So, undoubtedly, there are opportunities, but I think we have to make sure that those opportunities are feasible and are workable. So those are the comments I'd like to make. Of course, this gentleman has made a very valid point about P&I. Yeah, fine, that's fine. But we are talking here about having a large mosque. P&I, obviously, you're talking about ship owners, and they've got funds available. But when you're talking about shopkeepers and people who want to insure building, and I think the other point is, of course, life insurance cover. People will have mortgages, Sharia compliant mortgages, and undoubtedly they want to have life insurance cover. But that is not available. And this is, I think, if you're going to be successful, those are certain ideas I'm just floating around. Thank you.
Thanks very much. John?
Yeah, I endorse everything you've said there, and particularly about the very narrow margins that exist in personal lines insurance and the opportunities that there are for life cover and protection cover. But just to pick up and expand on that point, last point you made about mortgages, the Islamic banking market is far better developed, certainly here in the UK, than the insurance market, and it is perfectly possible to get a Sharia-compliant mortgage. That seems to me to be an enormous opportunity for the insurance market, absolutely, to design a product that can be sold alongside an Islamic mortgage that can be used to repay the mortgage at the end of the term, and indeed to provide protection for the mortgagee's family should the mortgagee unfortunately die before the mortgage is fully paid off.
I think I'd just like to say that one point that Lord Sheikh just made is that the risk is exactly the same, whether you're doing it on a conventional basis or on a mutual basis. A ship is a ship, a business is a business. So I come from an underwriting background, and when I'm looking at a risk, I will look at it in exactly the same way. It is what comes behind the scenes almost, is the Sharia compliance, the pooling, the surplus and losses, the investments, and even that is already available. It's either in the mutual sector or it's available in other countries. The products are already available. The coverage, the policy forms will not change. So it's just a matter of bringing all these things together, and the key there would be distribution. I think that is absolutely key in the UK and Europe. It's getting close to the communities, the people who can influence the communities. It's about appealing to non-Muslims as well, exactly the same way as we discussed this morning in terms of Islamic banking. It needs to be branded as an ethical, sustainable product. Everything else is there. It's just a matter of putting it together.
I think important point also the pricing is what is done. It's got to compete with conventional products. Either 15% people will buy Takaful insurance irrespective of pricing. But I think 85% of them are conscious of how much it's going to cost. So pricing and doubting is very important factor.
Right, so we've run out of time. If anybody has any final comments, please go ahead. No more comments? All right. Well, thank you very much. I'll hand over to Sheikh Bilal Khan.